So before we talk about this, I just want to know, did you guys see over the weekend the article on the front page of the New York Times? Do you read the New York Times at all?
No.
Yes, I do.
So passing by a newsstand, you could have seen it.
Needles in my eyes.
You could have seen it, and basically it was talking about how Elon has brought the internet, broadband, satellite to the Amazon in Brazil. Brought it to the Amazon. People don't have clothes, and now they have the Amazon. Now they have the internet. Unbelievable what he's done. Unbelievable, changing the world.
You know, it's been a big deal in Ukraine, too, on the war front. Hey, before we jump into what you think about Tesla and the pay package, whether you're going to vote in support of that, why don't we talk about how much you own? Because I was looking, and it looks like I've known you've been a very long-time holder. Some of your funds own 2.7%, 3%, 2.8%. The Barron Partners Fund is almost 30% long position in Tesla. So you are a massive shareholder.
It's also $13 cost. So, you know, so we've owned it since 2014, 2016. Between 2014, so I met him in 2010. 2014 and 16, it took me 4 years. He said, what took you so long? 2014 to 16, we invested $400 million, made about $5 billion at the peak. Now we made about $4 billion, sold about a quarter of our stock 3 years ago.
How much do you hold now, though, in total? How many shares?
I don't remember the number, but it's a big percentage of our assets. It's 7 or 8% of our assets in total.
Billionaire investor Ron Barron was recently on CNBC to talk about Tesla and Elon Musk, and he went into why he supports Elon getting his pay package and how great Tesla's entire ecosystem is. He also made an incredibly bullish forecast for the company's market cap, and we're going to delve right into that in today's video. But before we do that, if you want to keep up with Tesla's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
So what do you think about this pay package? This is a pay package that shareholders approved once this Delaware judge has overturned it, and now it's going back to the shareholders again. How will you vote your shares?
We're voting for the package. But before I talk about that, there's 3 things I want to discuss with you today. Number 1 is contracts, of course. Then I want to talk about Elon's ecosystem, you know, all the different things he's doing. And then Elon, I want to talk about that, what he's accomplished. So about the contract. So first of all, he was, you know, when we started, these numbers are pretty cool. When we started, when I met him in 2010, they were doing 2,000 cars a year. And then in 2014, it was 31,000 cars. That's when we started buying. In 2016, 76,000 cars. And last year, 1,800,000. So significant growth. And he made promises, if he met these metrics of EBITDA, of revenues, of market cap, that he would get this extraordinary compensation. And the compensation, when he started, when the contract was signed, it was the company's market value was $53 billion. It got as high as $1 trillion. And it's now $550 billion. I think in the next 10 years, we're probably going to make 4 or 5 times our money again in Tesla. So he's created tremendous wealth for people, and he was paid, if this contract is enforced, which I think it should be, he's paid $56 billion.
Yes, you've heard that right. Barron thinks that Tesla will 4 to 5x in the next 10 years, and this would put Tesla at a $2.5 trillion valuation. And to some, this might be considered conservative. For instance, ARK Invest's Cathie Wood has a price target of $2,000 on Tesla stock by 2027, and that's a market cap of $5 trillion. Regardless, both scenarios would definitely be welcomed by Tesla stock investors, as the stock is down 30% year to date. So, even if you think Barron's forecast is too low, we can all still agree on the catalysts he lists for the company, and we're going to talk about them right now. Hello everyone, and welcome back to Investocracy.
So I think that it's really unfair the way they're addressing this, and I think that he earned it, and he deserves it, and he should be paid it.
You've said for a long time, when we've asked you what your biggest concern about Tesla would be, is the key man theory, that so much is riding on Elon Musk being there. If he's not there, you don't think the company is worth the same. So what do you think happens if this package is not approved? What will Elon do?
I can't see inside of his mind, but I know that he has created tremendous value for everyone. I know he has a big stake in Tesla. But you know, when I started in business in 1970, one of the people who really helped me at the very beginning of my career was Jay Pritzker. He's Tom Pritzker's dad, and he's the founder of Hyatt. And we were talking about arrangements, and he said, Ron, if you need to have a contract, then you're doing business you're doing business with the wrong person. You can't rely on a contract to do business, and you have to. He's a handshake guy. So if I say I'm going to do something, I do something. We said, as Tesla as a company, Elon, if you perform, this is what you're going to get. How are you going to go back and renege on that, especially when all the directors and all the shareholders approve it? It's crazy.
Regarding the upcoming vote, Barron had one message to new Tesla shareholders who weren't around in 2018 when the package was first brought up and now think about voting against it. The billionaire investor said that one of the reasons why Tesla stock now is worth half what it was worth 3 years ago is the controversy surrounding this package. So Elon winning it is actually in shareholders' favor. And when asked about the concerns over Elon leaving Tesla for his other companies, Barron started talking about what he called the Elon ecosystem and said that Tesla shareholders will actually benefit from XAI and X. This is because of the massive data centers that XAI is planning to build with hundreds of thousands of NVIDIA GPUs, which could eventually help Tesla develop its AI products like FSD and humanoid robots by sharing data if a collaboration happens between Elon's companies. Additionally, all of the data Elon is collecting through X could help improve AI and robotics at Tesla. He then talked about Tesla's robotics business, and he seems to agree with Elon's opinion, which is that it'll be worth more than Tesla's EV business in the future. Barron said that the robotics business will be hugely profitable and that it's not yet priced into the stock. He added that in the next 15 or 10 years, investors are going to see as much as 6 times their money, and then said that he can't even put a top on how much money Tesla will make because of its robotics. He also added that as the robot assistant advances further and further, people's lives will become dramatically better. And he predicts that Tesla will be able to sell software to Optimus customers every year that improves the technology, just as the company currently does with its electric vehicles. Barron also explained that his firm has maxed out its exposure to Tesla with a 7% weighting across its funds, and that's the only thing stopping him from buying more Tesla shares. He even said that if he wasn't restricted from buying more, he would continue buying at current levels. So, investors who actually can buy more Tesla shares should do so right away, and we're going to explain why right now. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Quick things, Morgan Stanley did reiterate its overweight rating on Tesla heading into that shareholder meeting. Musk recently said he wanted 25% voting control in Tesla to keep his AI projects inside the company. And Adam Jonas said without Elon Musk achieving that 25% voting stake in the company, we believe Tesla shareholders should be prepared for Tesla to significantly slow down and curtail its direct investments in sensitive advanced AI efforts, which I think is notable, seeing as Elon Musk refers to Tesla as an AI and robotics company. And then, yes, finally getting to those China sales that you mentioned, saw a nice pop in May. China Tesla sales rose 17% year over year in May to about 72,573 units, likely boosted by the Beijing Auto Show and government trade-in programs kind of helping demand. Just to put that into perspective, BYD, Tesla's big rival over there, sold 330,000 plus in the same period. So Tesla shares down about 1%, BYD up about 1.2%. And then, as you said, NVIDIA, which is, of course, a key player in the chip story, up about 2% this morning.
All right. Kind of with Barron there on the description, you know, even if you disagree with, like, how some of his things, you know, we wouldn't be here if it weren't for him, for the stock. People love to have it both ways, you know. You want the eccentric genius on the way up, but then times get rough and you don't want him anymore. Just kind of hypocritical. All right.
And
thanks.
that's what they agreed to pay him as
Yeah,
well. I mean, it's
that
hard
too.
to
I know, right?
That's
Like
what he deserves, and then take it back.
it's like, yeah, it's just it doesn't even seem like there's much debate. Like, okay.
Aside from Morgan Stanley, the financial services firm Canaccord also just raised its price target on Tesla stock to $267 from $222, while maintaining its buy rating. The reason why some Wall Street analysts are still bullish on Tesla, despite the recent headwinds, is the company's impressive AI offerings. Tesla sold 1.8 million EVs in 2023, which was its main source of revenue. But that might change in the future, because each Tesla vehicle could soon become a vessel for the company's FSD software, which has the potential to unlock several new revenue streams. Tesla's latest FSD version 12 remains in beta testing, but customers have used it to complete 300 billion real-world miles, generating valuable data that brings Tesla closer to officially releasing the technology to the wider public. Tesla will sell FSD to its customers on a subscription basis, creating a recurring revenue stream with a high gross profit margin. Plus, Elon floated the idea of licensing FSD to other car manufacturers, which creates another new revenue stream. So to put it simply, unlike cars, software can be developed once and sold an unlimited number of times, so it can be extremely lucrative. And then there's the robotaxi. ARK Invest believes the autonomous ride-sharing industry alone could generate $4 trillion in revenue by 2028, and it's a big reason for the company's ambitious $2,000 price target on Tesla stock. So, there's a lot of opportunities for Tesla when it comes to AI, but investors need to be aware of the risks, as technologies like FSD and autonomous ride-hailing still need mainstream regulatory approval and, more importantly, widespread adoption from consumers. When that happens, there's no doubt that Tesla will be a completely different company than it is today. And this is why Tesla stock is a stock to buy and hold for the long term. But what do you think about Tesla stock? Is it a buy at its current price? Let us know your thoughts in the comments section, and don't forget to tell us what your valuation for Tesla is. If you would like to know what companies like Tesla have been up to these past few days, go ahead and click on the next video on your screen. See you there.